Well, it is nice to have you with us this morning. We will have full market coverage coming up this hour, but we want to start with more on that Canadian banking news, the sudden departure of Laurentian Bank CEO Rania Llewellyn. Earlier this morning, Laurentian announced she'll be replaced by Laurentian's head of personal and commercial banking, Eric Provost, but with no explanation on why Llewellyn is leaving. It's a surprising end to what ultimately was a brief tenure, considering Laurentian had proudly named her the first woman to lead a major Canadian bank back in 2020. Now, we do know there's been a lot going on behind the scenes at Laurentian. Just a couple of weeks ago, the bank wrapped up a strategic review, which did not result in Laurentian finding a buyer for its business. Many analysts thought another Canadian bank, perhaps National, would step in and acquire Laurentian. Instead, Llewellyn shook up the management team in a move that actually promoted the executive who is now replacing her, Eric Provost. At the time of wrapping up that review, Laurentian was fairly short on details about the new path forward, stating that more information would come during its financial results update in December and at an investor day next year. What's curious, though, is that Llewellyn, at the time, sent a very confident message to investors about the path forward, as did Laurentian's board chair, Mike Miller, who had specifically cited the executive management team making Laurentian a stronger organization over the past three years. Well, this morning, we mentioned this in our newscast, Miller was replaced as the board chair by another board member, Michael Boychuk. And again, very little was said about the reason for the change. The only substantive issue mentioned in Laurentian's press release was the fact that the company recently dealt with an online service outage, which made headlines in recent days. Following an IT maintenance update, that outage had affected customer deposits and bill payments, among other things. It was expected as part of the company's new path forward that Laurentian would focus on upgrading its technology. But again, the bottom line is that there are a number of unexplained matters in this Laurentian update, and we'll have to see how the market reacts, considering the stock sank last month when that review wrapped up with no sale of the business. Bryden Teich is a partner and portfolio manager at Avenue Investment Management. He joins us here this morning. I want to start with this bank story and your reaction to it. What do you make of it?
Well, I think you did an excellent job sort of highlighting all of the details in a very specific way, stuff that I wasn't even, to be honest, familiar with. And I mean, it sounds like a board shakeup. And obviously, the management team that was there tried to implement a vision a few years ago. Obviously, that wasn't successful. Which then was hopefully going to end in a sale of the business, which then didn't happen. So you can imagine, I can imagine being in that board, having that conversation, saying it's time for new leadership. And I mean, it seems like a sort of a convenient way to say it's because of the IT outage, which doesn't really seem like I would suggest. Like if I'm trying to read the tea leaves, it just is, it's a bank that is, I think the banking sector as a whole is in a difficult moment. I think Laurentian specifically has been searching for an identity, and I would say that perhaps the management team didn't find it, and this is just a board shakeup, and so that the bank can head in a different direction. Do
you have any general observations on the business that is Laurentian and what their challenges may have been?
Yeah, so I'm probably 2 years ago, I met with the management team, just doing my sort of regular annual checkups with all the banks, and I think obviously, they have a very regional focus in Quebec, but National has a dominant position in Quebec. And so I think it's very hard for Laurentian to compete with National. And I think that there's been changes over the last several years to capital markets, to their research, their sales and trading. All of that's been cut back. So it's become much less of a capital markets focused business, much more of a sort of a bricks and mortar retail in Quebec. But you're competing against a very dominant player in National. So my sense from the bank was that they were trying to elicit sort of investor feedback as to the direction that investors thought they should head. I think there was also a focus very specific about trying to improve their ESG rating and try to get on people's screens for those reasons, admirable or otherwise. And ultimately, lending is a tough business. We're about to go through probably a tough credit cycle. And you need to have, I would say, a management team that can focus on getting the institution through that. What Laurentian becomes after that, I'm not sure.
So there's a lot we don't know, but we do know in the markets that investors generally hate uncertainty. We highlighted that when they announced the wrap of that strategic review and there was no sale, and there had been a lot of dialogue in the market that might be happening, that we saw a substantial sell-off in the stock price. As investors are digesting this news today and watching what happens with the stock as well, what are some of the questions they should be asking or thinking about, do you think?
I think just what is the direction of the bank? And I think, I mean, it sounds like they have their investor day coming up in the winter.
Next year. I mean, they've got financial results in December.
You need to really sort of solidify a message, and obviously, you tried to solidify that with the previous executives, which they're now out. So you kind of have to come out with a message quickly. I think a lot of that move, trying to go private or sell themselves, I think it's also a great way to shake out any shorts that were in your stock. And so the kind of rally that you saw and then the reversal, I'm not surprised by. It's not a name that you would want to be short into that kind of a going private event. So I think a lot of that might have been short covering rather than people finding new interest in the bank. Obviously, when that gets unwound, it comes violently back down, and you're now kind of hanging on a cliff here.
Okay, well.